Natural gas futures rise sharply following the holiday weekend as frigid weather across the US boosts heating demand for residential and commercial users. Ah, yes, nat gas prices are spiking today because who doesn't love a good speculative frenzy, right? I mean, sure, the fundamentals are downright bearish, but let's throw a little chaos in there for fun. Let's break it down. We've got a market flooded with ample supply, just waiting to be ignored. Production has been consistently growing over the last few weeks, and there is still plenty of natural gas sitting in storage, ready to be sold at discounted prices. But hey, who needs supply and demand when you've got weather events that sound dramatic enough to stir up a panic? A slight chill in the air? Freeze-offs here and there? Oh, it must be the next Arctic blast of doom. Time to drive those prices up, because speculation has absolutely nothing to do with it, right? And don't get me started on geopolitical concerns. Sure, there are some regional tensions and ongoing Russia-US talks in Saudi Arabia, but nothing that would truly impact global supply. But why let reality spoil the party when you can rally behind the latest geopolitical tension headlines and start placing bets on price swings? So, while the natural gas market is awash with bearish indicators, growing production, and milder weather forecasts, why not just ignore all of that? Speculators know best. There's no need to worry about actual fundamentals when you can play the short-term guessing game. After all, a little speculation is a perfect excuse to ride the waves of volatility for a quick profit. Okay, maybe this never-ending cold spell will stick around until March, who knows? Let's check the latest weather update, and surprise, surprise, we're about to be hit with a major warming trend in late February and early March. Shocking, right? Okay, let's break it down. Prices have surged, influenced by several factors that suggest the current spike may be speculative rather than driven by fundamental supply and demand dynamics. Firstly, natural gas markets are highly sensitive to investor sentiment and speculative trading. Recent price movements have been marked by significant volatility, with prices swinging more than 5% on multiple occasions. Such fluctuations often reflect speculative activity rather than actual changes in underlying supply and demand. Secondly, while colder weather can increase demand for heating, it can also disrupt supply by causing freeze-offs, or wells and pipelines freeze, reducing output. However, these disruptions are typically short-term and localized. The market's reaction to these events can be exaggerated by speculative trading, leading to price spikes that may not align with the actual duration or impact of the supply disruptions. Thirdly, geopolitical events, such as conflicts affecting gas-producing regions, can create uncertainty in the market. For instance, damage to Ukrainian natural gas production facilities due to geopolitical tensions can lead to concerns about supply stability. Speculators may react to such news by driving prices up, even if the actual impact on global supply is minimal or uncertain. And finally, the natural gas market is susceptible to speculative trading, where investors buy and sell based on short-term price movements rather than long-term fundamentals. This behavior can lead to rapid price increases that are not necessarily supported by actual changes in supply or demand. From a technical perspective, a trade through $3.80 would indicate renewed strength. If enough buying emerges, the next upside target sits at $4. However, when the bull's euphoria fades and the hangover kicks in, a harsh reality check awaits. A brutal correction will slam the market, driving prices back to the key support at $3.50, much like the steep drop on January 28 to 29, and could potentially drag prices even lower into the $3 support zone. Let me know in the comments, what are your thoughts on this price surge? Please like, subscribe, and comment to support the channel. See you in the next one.